Today's fast-paced and dynamic financial markets, investors are constantly seeking innovative ways to optimize their trading strategies. With the advent of artificial intelligence, traders now have a new tool that can help them make more informed investment decisions. AI-based trading strategies leverage machine learning algorithms to analyze vast amounts of market data and identify trends, patterns, and correlations that are not visible to the naked eye. This allows traders to make data-driven decisions, reduce human bias, and execute trades with greater precision and speed. One of the most popular AI-based trading strategies is algorithmic trading, which involves using computer programs to execute trades automatically based on predefined rules and criteria. Algorithmic trading has been proven to deliver superior returns compared to traditional human-based trading methods, and is now widely used by hedge funds, banks, and institutional investors. AI-based trading strategies are not without their challenges, however. These include the need for high-quality data, the risk of overfitting or bias in algorithms, and the potential for unforeseen events that can impact market behavior. The Lorentzian classification AI algorithm is a powerful tool that has been gaining traction in the financial trading world. Developed by a team of researchers at the University of Michigan, the algorithm uses a machine learning approach to classify market data and make predictions about future price movements. In this video, we will provide you with a high win rate trading strategy based on an artificial intelligence trading indicator. We've already made a video about this tool in the past, and many of you have shown massive interest. So we've decided to explore this topic further and show you another way of using this amazing AI tool. This indicator is called machine learning. You can add it to the chart by clicking on the indicators option and typing machine learning. The one that you're looking for is this one created by J.D. Horty. This is not a repainting indicator. Its signals remain on the chart once the candle bar is closed. This AI indicator uses a Lorentzian classification algorithm to generate its signals. The Lorentzian classification algorithm is based on a mathematical concept known as the Lorentzian function. This function is commonly used to model physical phenomena in fields such as physics and engineering, and is now being applied to financial market analysis. The algorithm works by analyzing market data and identifying patterns and trends that may not be apparent to human traders. It then uses this information to classify the data into different categories, such as bullish or bearish, and make predictions about future price movements. One of the key advantages of the Lorentzian classification algorithm is its ability to handle noisy or incomplete data. Financial market data is often complex and difficult to interpret, but the algorithm is able to analyze this data and make accurate predictions. Another advantage of the Lorentzian classification algorithm is its ability to adapt to changing market conditions. As the market evolves, the algorithm is able to update its predictions and adjust its trading strategy accordingly. One of the main applications of the Lorentzian classification algorithm is in high-frequency trading, where traders use automated systems to make trades in milliseconds. By using the algorithm to analyze market data and make predictions, traders can make faster, more accurate trades and take advantage of small price movements. However, as with any trading algorithm, there are risks involved. The accuracy of the algorithm depends on the quality of the data used to train it, and unexpected events can always impact the market in unforeseeable ways. Despite these risks, the Lorentzian classification AI algorithm is an exciting development in the world of financial trading. As technology continues to evolve, we can expect to see even more advanced and sophisticated AI algorithms that will transform the way traders approach the market. So how exactly should we use the machine learning indicator this time? Well, you must first access the indicator settings and disable everything except these buy and sell signals. This is done to make the chart cleaner. Once you've finished, head over to the indicators one more time and search for Volume Profile and Volume Indicator by DGT. Disable the background in the profile range. The Volume Profile Indicator is a technical analysis tool used in trading to help traders identify levels of support and resistance, as well as potential price movements based on the analysis of trading volume. The indicator displays the volume of trades that occur at different price levels over a specific period of time. This information is then plotted as a horizontal histogram that shows the volume of trades that occurred at each price level. Traders use this information to identify areas of price congestion, where a large volume of trading activity has occurred, indicating potential levels of support or resistance. They may also use the indicator to identify potential breakouts, as a sudden increase in trading volume at a certain price level may indicate a shift in market sentiment and the potential for a trend reversal. Overall, the Volume Profile Indicator can be a useful tool for traders to gain insight into market activity and make informed trading decisions. However, like any technical analysis tool, it should not be used in isolation and should be combined with other analysis techniques and risk management strategies. That's why we're using it with our AI-based indicator, which is our main confirmation tool. So how should we enter long and short trades? First, and very important thing to mention is that we do not take trades when the price is closed inside the blue background. We found that the price often consolidates within this area. So our goal is to take trades when the price is above or below this zone. For a buy signal to be valid, the following conditions must be in place. First, the price must be closed either above or below the range zone. Second, the machine learning indicator must print a buy signal. Rule number 3. Look at the volume bars on the right-hand side. The buying volume must be increased. Keep an eye on bearish volume as well. It is not advised to enter a long trade if there are large bearish volume bars above the entry price. Bearish volume often signals strong resistance. As you probably know by now, buying at the resistance level is a bad idea, as the market can reverse rapidly and hit your stop loss. So avoid that as much as you can. If these conditions are met, place a buy order at the close of the price bar. The stop loss should be placed below the recent swing low. Target 2 times the risk. Here's another example we'd like to show you. Here the indicator issues a buy signal. If we take a look at the volume at the current price, we see that it's bullish. It is also increasing. No bearish resistance so far. For sell trades to the opposite. First, wait for the price to close below or above the blue zone. Second, look at the volume at the closing price of the candlestick. It must be mainly bearish. Do not take a trade if there is strong bullish volume just below your entry price. When the conditions are met, place a sell order at the close of the price bar. The stop loss should be placed just above the recent swing high. Target 2 times the risk. We tested this strategy on the price of Bitcoin on the 3-minute chart. The win ratio was close to 90%, which means on average 9 trades out of 10 are winners. Traders, if you enjoyed today's video, leave a like to it and subscribe to Magic Indicator Strategies. We're here to help you become an expert in trading as fast as possible.